Could your portfolio handle a pressure drop like the S&P 500 has been experiencing since April? Well, let's unpack that. From company earnings reports shifting gears to economic tremors influencing investor sentiment, the S&P 500's performance has been nothing short of a roller coaster ride. Picture this. Stock indicators such as the RSI and MACD are flagging overbought territories one moment and plunging into undersold valleys the next. It's clear, market volatility is becoming the norm. But let's dig deeper. The price-to-earnings ratio has been sending a strong signal, hinting that stocks might be overvalued, leading investors to question their next move. Moreover, with upcoming economic reports like global inflation rates and employment data on the horizon, analysts are buzzing with speculation about the market's trajectory over the next week. Here's where it gets interesting. While some experts suggest we might see a correction, others believe this could be a hidden opportunity to capitalize on undervalued gems amongst the turbulence. So, is the market drawing the curtain on a golden era, or are we standing on the precipice of fresh opportunities? Buckle up, because we're diving into the crucial details you won't want to miss. Let's talk indicators. If the relative strength index is the heartbeat, then last week's readings showed fluctuations that left many traders searching for aspirin. A recent dip below the 30 mark indicated overselling, hinting at potential buying opportunities for the daring. Remember, history shows these dips don't last forever, and savvy investors know how to time their returns. But here's where the plot thickens: the MACD line. It just crossed below the signal line, typically a bearish sign. Yet, context is everything. Previous instances have been false alarms, suggesting that this could be a short-term hiccup in a longer bull run. It's no wonder traders are gripping their seats, awaiting more solid signals from next week's economic data releases. Valuation chatter also can't be ignored. With current PE ratios floating higher than the historical average, some analysts are cautious. The question on everyone's mind: are we sitting on overpriced stocks? As inflation creeps its way into the economic narrative and the Fed keeps investors on their toes, these valuations will certainly be put to the test. It's a game of chess, not checkers. So, where does that leave us for the next week? Forecasts suggest more sector rotations, with tech stocks poised for potential comebacks, while consumer staples may face tougher scrutiny. Stay tuned, because the moves made now could shape where the S&P 500 heads next. Let's zero in on sector rotations. Tech stocks, which have been slipping lately, are raising eyebrows. The potential for a rebound is there, especially with innovative companies that are continuing to release promising advancements. Just consider the recent buzz around AI advancements and green tech investors keeping a close watch on these developments. In contrast, consumer staples, typically seen as safe havens, might not be living up to their reputation as stability anchors right now. Rising costs and supply chain hiccups are creating potential headwinds that could impact earnings forecasts. Next up, the larger economic picture. Market participants can't discount the impact of imminent policy shifts. The Federal Reserve's stance on interest rates and inflation control measures could either calm the waters or stir up a storm. High inflation numbers would likely trigger more aggressive monetary policy, but are we really on the verge of rate hikes? This uncertainty adds an extra layer of complexity, prompting a closer inspection of how policy dynamics affect stock trajectories. The anxiety is palpable, and yet there's a sense of anticipation. Could this period of uncertainty be the calm before a storm of opportunity? Keep your portfolios nimble, eyes peeled, and settings in place to respond swiftly. Navigating the S&P 500 now means staying informed and ready for the unexpected. Who knows what insights next week will unveil? Beyond policy shifts, let's not overlook global factors. International markets are also playing a starring role as geopolitical tensions, notably trade disputes and energy supply issues, loom large. Their ripple effects often hit the U.S. shores, impacting investor sentiment and reshaping market dynamics. These global crosswinds can swing the S&P 500's trajectory in unpredictable ways. On the horizon, we're also watching corporate earnings announcements. We're at a crossroads where the forecasted earnings growth, especially among tech companies, could potentially redefine market valuation models. Suppose these reports beat expectations, we might see a rally that bolsters investor confidence, driving the index to new highs. On the flip side, any disappointing earnings will likely trigger a sell-off, adding to the current volatility. Now, amid all these shifting variables, what's a forward-thinking investor to do? Diversification remains a key strategy. Balancing high-growth tech investments with more resilient sectors like healthcare and utilities might provide a buffer against potential market downturns. Keeping an ear to the ground, monitoring Fed announcements, and staying attuned to global shifts can position you to make timely, informed decisions. As we edge closer to understanding this intricate puzzle, remember, every data point offers a clue. The ability to interpret these signs is what separates the successful investor from the rest. So, what's your next move? Let's see how this plays out as the new week unfolds. Let's touch on the power of strategic timing, an often underrated aspect of investing. Understanding market cycles is essential. When volatility rises, seasoned investors know it can birth generational buying opportunities, what some call buying the dip. But timing is everything. Jumping in too soon or holding out too long can make all the difference between loss and profit. Consider the value of patience. In a world driven by instant gratification, the stock market rewards those who play the long game. The S&P 500, with its historical trend of growth over decades, is a testament to the power of resilience and strategy. Maintaining an investment horizon that spans several years rather than weeks or months can help weather short-term storms. Lastly, let's look at technological advancements in trading tools and resources available to individuals today. Algorithms, AI-driven insights, and sophisticated platforms can offer smaller investors the kinds of analysis once available only to institutional investors. This democratization of data is a game changer, allowing better informed decisions and leveling the playing field. So, as you evaluate your own strategy amid this swirling environment, ask yourself, are you equipped with the right tools and mindset to not just ride the waves, but possibly thrive in this current market landscape? Brace yourself, because as next week rolls in, staying alert with these insights will be your secret weapon. As the market landscape evolves, remember, investing is as much about understanding tools and trends as it is about knowing your personal goals and risk tolerance. The S&P 500's fluctuations offer both cautionary tales and windows of opportunity, and positioning yourself adeptly is key. Now, here's where you come in. If you're committed to navigating these turbulent times with insight and precision, make sure to subscribe to our channel, where we break down market trends and give you the edge you need. Hit that notification bell to stay updated with our latest insights and never miss an opportunity. Take control of your financial future. And remember, informed decisions are powerful decisions. You've got this.